Retailers, brands, businesses, they don't care about your tech. They care about what the outcome that the tech can drive.
A huge difference between the price of a good that you would have it in the physical shop as opposed to online. So most of the retailers, they accept it as a cost of doing business. Now, to make change happen, you have to push back. Why haven't retailers or more retailers pushed back?
I think it comes down to, let's call it boardroom prioritization. And having sat around the table numerous occasions looking at a P&L for big businesses and trying to work out how we find cost savings or efficiencies, etc. There's always larger ones than necessarily the line at the bottom, which is merchant fees. Typically, you'll go straight to your direct labor line.
Hey everyone, this is Said and welcome back to Messy Growth. My guest today is Tom Hill. Now, if you looked at Tom's LinkedIn profile, you'd probably describe him as a transformation leader, a digital exec, maybe a fintech CEO, and you'd be right. But what caught my attention wasn't the titles. It's the fact that Tom has spent nearly 2 decades seeing business from almost every possible angle there is. He started on the front lines of retail, managing stores and teams. He worked in customer experience, business development, and large-scale transformation. He helped lead digital and business transformation at one of Europe's largest retailers. And today, he's the CEO of Zintrix, a fintech company sitting at the crossroads of loyalty, payments, open banking, and digital identity. We're going to dig deeper into that. What's interesting about that journey is that it gives him a perspective very few people have. He's seen what happens in the boardroom. He's seen what happens on the shop floor. And he spent years trying to close that gap between the two. So today we're going to talk about transformational leadership, customer loyalty, retail, fintech, and what actually drives change inside of those organizations. Tom, welcome to the show.
Thank you, Said. Appreciate it.
No, you're very welcome. So let's dig right into the substance of things. Like I said in my intro, I spent 20 years in retail and operation size, Sainsbury's, KFC, Poundland, SSP. Then you became a fintech CEO. What did 2 decades on the shop floor teach you that most fintech founders simply just don't have?
Yeah, okay, no, good question. Honestly, it's probably that like retailers, brands, businesses, they don't care about your tech. They care about what the outcome that the tech can drive. So I think, having sat on the other side of the fence, a lot of fintechs had come to us and to me in various different roles, sort of saying, hey, look, we've got this really cool piece of tech and we think it can do X, Y, and Z. But actually, often without that operational grounding or operational understanding of what it is, what headache gap really truly solves, it's kind of redundant and really hard to capture attention and engagement. So I think that's one. And then I think the other one is, going back to what I just alluded to, the operation being grounded in operational reality as well. That's really important. And if you can't demonstrate that on the fintech side of the fence, you kind of lose a little bit of credibility and engagement. I think it's really, really, really valuable and often underplayed.
Yeah. It's something interesting you said that folks on the ground, they don't really care about your tech. They care about the results. Interestingly enough, if you look at a lot of the fintech CEOs, folks generally who are building products in the world of SaaS, so to speak, while they might care about impact, they care a lot about their product and perception of it, more so than the actual impact it drives. It's because there is a disconnect there, or is this something that large amount of folks in our space just simply don't understand, have yet to catch up?
I think it's hard when you're in fintech and you've invested so much time, blood, sweat, and tears into your product and your tech. It's totally natural, I think, to really care about how your product is perceived. I completely understand it. But sometimes because of the consumption of your own product, your own tech that you've worked so hard to build, I think in some cases you might lose sight of the actual end result and what it is you're trying to do, and that loss of grounded reality again, so to speak. So I definitely think that's a piece, but I do truly understand why some fintechs historically have been very, very consumed with perception of their product, because that is their business. But ultimately, I think, when you step back, the most successful ones are the ones that really focus on how they can really help shape outcomes for the businesses they're doing, making a partnership with.
Talking about the disconnect, is there a customer behavior you've seen change dramatically over the past 10 to 15 years that most business still haven't adapted to or catch up to?
Hmm. I think probably the biggest shift in consumer behavior, customer behavior in that time period is probably the demand for immediacy. I think
Mm,
that's the likes of Amazon, Uber, um, Just Eat, whoever it might be, have really shifted the goalposts in terms of all levels of expectation on how quick customers should expect to have something, and equally the degree of friction that should be accompanied by any product as well, i.e. they want a frictionless um, sort of experience. So I think that's a really big shift in the last sort of 10 to 15 years, and therefore has shaped um, requirements for businesses in terms of the product that they're delivering.
yeah. Talking about your experience, you went from managing 150 stores in London to director of digital at Poundland. Most folks go one way or the other, ops or digital. How did
Yeah.
straddling both change how you think about transformation?
Um, Firstly, I was really lucky to have the opportunity. I was working with some leaders that sort of didn't necessarily have that distinction between the two, and you have to go one way or the other. And they sort of put a lot of faith in me for that. So I'll always be thankful. And actually, I think one really helps the other, because let's be honest, there's no um, even if you're operating in the digital space, you still need to deal with the physical space at the same time. So there is definitely that
Yeah.
omni-channel piece that you often hear about is critically important, and therefore to be able to understand both sides and how the digital element will be treated and responded to in store by the physical store, I think is actually quite a good advantage.
Mm. I want to talk about your current venture, Zintrix. And of course, it would be great if you explain to folks what Zintrix does. But just so I try and understand, Zintrix is trying to unify loyalty, open banking, and digital ID into a single experience. That's three very hard problems at once. Why does it have to be all three? Why not just pick one? And I'm asking from the lens of folks that I speak to, and general rule of thumb is, hey, you got to niche down. Pick one thing and one lane and stick to it and try to dominate it, and then you can venture on to two, three, four, and five. Why that?
Sure. So, well, firstly, we in our strategy, we don't say you have to do all three at the same time every time.
Sure.
We aspire to be able to do all three at the same time every time. Equally, that doesn't always fit. But if you think about a Venn diagram, we definitely always do two of the three at the same time. And that's because they help each other. And I'll talk a bit about what I mean on that front in a second.
Sure.
Um, so so briefly, what Zintrix does, what we do is we are a fintech that brings open banking, pay by bank, to the fore, and gives businesses and customers opportunities to leverage the power of pay by bank and open bank. Um, and we do that because we believe in open banking and pay by bank, and the opportunities and the benefits of it tremendously. So for those people that don't know what open banking is and does, and the benefits of it, very, very quickly, it gives businesses access to transformationally reduced merchant fees, transaction fees, because it effectively bypasses MasterCard or Visa, the sort of intermediaries, and it creates a commercial relationship between a customer and a business, and effectively you're doing a bank transfer from the customer direct to the business, and therefore speeding up the whole process at the same time. So you've got an opportunity to leverage significantly lower transaction fees and immediacy in terms of cash flow. So that's really, two really big benefits. And thirdly, you've got bank grade security and access to data. So that, really big benefits to the business from an open banking and pay by bank perspective. It's been around for about 8 years, open banking has, but the adoption levels haven't necessarily been widely, the adoption levels haven't exploded, and they're not to the levels that people perhaps originally anticipated. And I think that's because, I'm pretty confident that's because from a customer perspective, those wins that are just outlined for the business aren't as clear cut. Why evolve your spending, your payment behavior from a pretty well ingrained Apple Pay or Google Pay? There needs to be some degree of incentive. What's in it for the customer? And that's what we work to do and unlock at Zintrix. So we help businesses leverage the benefits of open banking and pay by bank by sort of taking a step back and going, well, what would your customer like? What would your customer need or want to use that payment method? So we have to make it simple and easy, number one, and then we have to make it compelling for the customer to do that. And that's why we link payments with the likes of loyalty or ID. So, for example, in the loyalty space, if we're working with a brand that's already got a loyalty program, what we will do using our API widgets, etc., will be to hook into the loyalty program and offer a pay by bank white labeled solution for that brand within the loyalty program. So it's all sort of within the same journey. And we will work with that brand to develop a suite of exclusive rewards for that customer if they pay via the pay by bank route. That way, you're benefiting the whole loyalty program because you're adding value to the loyalty members. You're giving extra value to the customers that are using that, and then equally you're giving extra value to the brand because you're finding ways for them to drive margin at every transaction. So that's an example of, I'd call it a self-funding loyalty benefit through using pay by bank with us, and we'll do all the heavy lifting. There's a third way as well that you can drive adoption, we believe, and that's through digital ID at the same time. In retail, a real challenge is ID at the checkout, real genuine point of friction. So if you can link ID with payment or loyalty, all three together at the same time, you stand a chance of driving a really efficient, age-restricted, compliant transaction at a increased margin level right there at the point of the checkout, which I think is really, really interesting and really exciting. Again, particularly from my retailer hat on, ID really is a challenge at the checkout at the front end. It's clumsy for cashiers to have to ask customers. Customers get embarrassed. It comes with inherent risks. Retailers have to invest a lot of money in terms of making sure cashiers are trained up to follow the sort of Think 25 protocols, rightly so. And if we can find a way whereby there's a button or where you just have to effectively press it once and hook does deal with all of that together at the same time, well, we think that could be really quite transformational in the retail or hospitality market, and we're close to solving that conundrum.
Yeah, you're touching on a few very important points, and naturally I understand that there's always a resistance to change, but let's take a step back a little bit, go a few years back. When Uber came onto the scene, it was uber convenient. Folks really were tired of taxis. You'd have to call one, get it. You didn't really know when the taxi would be coming, and that solved a major problem that folks have on a day-to-day. Moving forward, we had Uber Eats, DoorDash, similar stuff. Now you can order food. It's just a lot easier. You can track it, trying to figure out when the food would be there. You can contact your delivery person as well. When COVID hit, a lot of folks, Uber Eats, DoorDash was kind of like a lifeline for a lot of different restaurants out there, retail stores out there, naturally, because otherwise it would have been all shut down. I get that. But now if you talk to folks, literally restaurants, and you look at what's the percentage that Uber Eats or DoorDash takes away from any single order, it's upwards of 20, 30%. Quite a lot. It cuts
Yeah.
into the margins. So if you
Yeah.
stick with that analogy and that example of what we have here, card fees are quietly killing margins for large retailers. I mean, if you're charging them to $30 and then online you're charging at $35, that's a huge difference between the price of a good that you would have it in the physical shop as opposed to online. So most of the retailers, they accept it as a cost of doing business. Now, to make change happen, you have to push back. Why haven't retailers or more retailers pushed back on it? Why isn't that something that gets a lot of the pressure on and people unite to kind of like make sure that this exorbitant amount of fees is something that gets away so they can actually provide the goods and services to people without this nonsense?
I think that's a really great question. And I think it comes down to let's call it boardroom prioritization. And having sat around the table numerous occasions, looking at a P&L for big businesses and trying to work out how we find cost savings or efficiencies, etc. There's always larger one than necessarily the line at the bottom, which is merchant fees. Typically, you'll go straight to your direct labor line, right? Let's take a couple of percentage points off that. Marketing budgets get gone to, because these are where the big quantums are, or capex budgets. They're typically there. But as you said, transaction fee, card fees are sort of just typically thought of as a cost of doing business, and they've been rarely scrutinized because it's just like, well, that's just what it costs, and there's not been much transformation in that space either, and they've been quietly increasing, to your point before. So they've just not really been scrutinized. And then actually, occasionally when they are, or when a big card contract is up for renewal, the sort of cost benefit analysis that's done and performed internally on whether you should rip out your existing payment infrastructure and put in a new one is often gone, well, on the IT prioritization stack, I'm not sure it's worth while that level of energy and resource for, the sake of a few £100,000 in savings or whatever it might be. But actually, I think ultimately, and there's a lot of brands out there, and myself included when I was on the other side of the fence, that just weren't aware of the disruption and the transformation in the space of payments, i.e. open banking. It's a concept. If you talk to many CFOs today, they won't have a clue what you're talking about. And I have to correct myself when I'm talking to CFOs in potential, prospect pitches, etc. I assume they know what open banking is, but the awareness of it is still relatively low everywhere. So you have to start with a bit of an education and a communication piece to demonstrate that there is another way. And again, having come from that side, I have to be careful that I don't end up sounding like I'm on a massive crusade going, there is another way, there is another way. It doesn't need to always be this
Don Quixote.
large transaction fee. So I have to hold myself back a little bit because I'm really passionate about it. Because often I've been at the other end where my direct labor budgets have been slashed, or my marketing budgets have been slashed. So there are absolutely other ways out there to reduce your merchant fees, your card fees. Open banking is a classic example. So I don't think it's been leveraged because I don't think the awareness has been there. And then back to my original point, there's always been other bigger, shinier sort of places to go, which could bring quicker savings to the business. But actually, there are other ways, and this open banking and evolving your payment behavior is actually, having done a few integrations now with some of our clients, really quite simple and headache free.
Now I'm about to offend you in some way because,
right,
one of the interesting things whenever you're talking to folks who are subject matter experts is that you try to read up on it as much as you possibly can, but you never meet that passion and understanding that the person on the other side has. So kind of like the comparison that I try to draw here, and throw me some rope here, please. It's similar to that of crypto. Crypto came onto the scene a long time ago, over a decade ago, and we kind of like felt like that it's going to go mainstream. Now, whether or not it has gone mainstream, surely people know about it, Bitcoin being the predominant one right there. I don't know if has really drill deeper into the way we, for the exchange for goods and services, I don't think it has gotten there yet, where worldwide people are just buying and selling, and then of course using it as a medium exchange for money. Fiat money still is a very big thing. So the comparison is open banking, which is, it's been about to take off for years. Upon doing research, that's what I understood. So I guess if you talk about it right now, like a lot of people do to Bernie Sanders in 2020, I think it was in 2020, why this time? What's actually different now, and what's still standing in the way for this to actually take off? Other than the fact that people are just not aware of it. I mean, that's a crusade, right? Every single time something that is on the scene, valuable, useful, somebody has to take that charge and kind of like run with it until you scream it enough times, and that momentum finally catches up to it.
Yep. So number one, you haven't offended me at all. I think that's, again, a completely legitimate question to ask. Open banking is 8 years old this year. It was conceived 8 years ago. And I think it's completely fair in what you say. The adoption levels, and we touched on it before, the adoption levels of open banking are below what was expected. And to your point, I think it was initially billed, especially in payments, as the next big thing 8 years ago, and it just hasn't really taken off. And there's a lot of hypotheses around why that might be. I think initially, and for a good chunk of those 8 years, a lot of it was about infrastructure, and the infrastructure not being in place. And I think that changed now. Actually, I think the infrastructure is in place broadly, and that is why you are seeing Pay by Bank appear on Amazon. You're seeing Pay by Bank appear on eBay, Justy. It's there more. It's more prevalent than it ever has been, and that's because the infrastructure is there. So that will now in itself start to help drive awareness and communication of it, and hopefully it'll be easier for me in future pitches, and I won't need to be explaining what Pay by Bank is all the time to CFOs, etc. Not all the time, but some of the time. And so I think that is only going to help, the fact that the likes of Amazon and eBay, etc., are now leveraging, and it's becoming more mainstream. So the next part becomes less about infrastructure and rollout and more about adoption. So the fact that Amazon and eBay have got it on available, and many other websites do have a Pay by Bank option, just plonked there, hoping customers will use it, I don't think it's going to be enough. I genuinely don't think it's going to be enough. And that's where the likes of us, Zintrix, come in. And we, as I said before, we work with these brands and these businesses to help them understand and actually put in play some sort of compelling reasons to help a customer start to shift and evolve their payment behavior. So I think personally the infrastructure is in place now. It now becomes, the question is more about how do we drive adoption? One of them is, how do you incentivize it, make it compelling? The other one, how do you make it as simple and easy and as frictionless as possible? And that will improve all the time from again, with infrastructural developments, CVRPs, commercial variable recurring payments, being one of the ways that will happen. Just there'll be many other reasons, I think, in the fullness of time as to why adoption levels will start to increase, because intentionality is there behind it as well. I think finally, the other angle the other point that I think is probably worth referencing is that the big institutions, particularly here in the UK, Bank of England, the UK Finance, are all firmly and squarely behind driving Pay by Bank and open banking in the UK economy. We're lucky enough to work quite closely with UK Finance and Bank of England in multiple workshops, sort of explaining what we're seeing on the ground, what we're seeing from a results perspective with the clients we're working with. And therefore, we know firsthand that Andrew Bailey, for example, in the UK, he's got two primary strategic goals. One is to drive stablecoin, and the other one is to drive Pay by Bank, because he wants to drive more competitiveness and disruption in the payment space. So when you've got that sort of weight and gravitas behind it, the infrastructural improvements are going to continue, which I think in time and in turn will help the likes of us sort of develop more creative ways to drive adoption with multiple different brands.
I want to talk to you about loyalty programs. Okay. As a person who uses them, naturally, I kind of feel like most loyalty programs are essentially discount programs with a very fancy name. What does a loyalty program that actually works look like versus one that's just burning budget?
Yeah, I think you have to. I think you have to stand back for a second as a retailer when you're developing your loyalty program, and you ask yourself, what is it that you want to achieve? Why are you bothering to drive a loyalty program? Are you trying to drive customer spend? Are you trying to drive customer frequency? Are you trying to drive customer acquisition? I used to work with my boss at the time. We used to talk about SWEET FA, spend frequency acquisition. I'll never forget that acronym. It was a really good one. So you got to think about what it is you want to drive with your loyalty program, and then how you go about it. I think more than that as well, a lot of brands lose sight of the value of the customer engagement and connection that you can get with loyalty. The real opportunity for personalization, which in turn really starts to drive that brand affinity from a customer's perspective. So there's no doubt that you can drive intelligent promotional engines that create discounts on products that you might already have a decent level of margin on, but are relevant and appropriate for a customer, which drives them to spend more money, or will drive them to come into your store or your online shop more often than they would necessarily anticipate. There's no doubt you can do that. And if you've got a really good customer data platform, linked up really well with your IDP and your CRM system, you can do that. And that's definitely a value add part of any loyalty. But I think almost to an extent, the more intangible benefit is the way that your customer is beginning to think about your brand outside of the four walls of your brand and of your store or on your website. Can you get into their psyche when they're not in your building? And can you get them talking about your brand to their friends or their family, and starting to create what we used to call raving fans that are more powerful and valuable than any marketing campaign you'll ever do? Sure. That's how I tend to think about loyalty. It's more about the intangible benefits and the brand affinity you can create as well. And by the way, when we talk about loyalty from a Zintrix perspective, we almost decouple the term as well. It doesn't necessarily need to be just like a pure play loyalty program thought sense. Loyalty can often be about incentives, sure, and a reason to do something. A really, really important sort of strategy that we follow at Zintrix, and are really proud to do so, is a strategy called payments with purpose. And we work with our brands to effectively incentivize the pay by bank piece through linking up with and building strategic partnerships with charities, for example, or ESG companies, B Corp companies, whereby we will incentivize the pay by bank option by saying, look, if you customer A go and pay via this slightly different channel, we will make a donation to this amazing charity over here, or we will offset the carbon footprint of the parcel you're sending around the world by planting a tree with this company over here that's certified to do so. And that's essentially what we call payments with purpose, which I would argue plays into the sort of loyalty narrative, because you've got an incentive that you're using, sure, to influence behavior.
Would it be a fair statement to say that you're betting that tying loyalty directly to payments is the unlock?
It's one of them, yes. It's definitely one of them. And got it. I think personally don't think it's too far-fetched, because you've just got to look at the amount of loyalty programs that are out there with businesses today, and the amount of businesses that are relying, sure, on them more and more. So you've got more and more businesses using and leveraging loyalty programs, every customer has to pay. If you can link the two, then that does make sense. Or, like I said, take some of the principles of a loyalty program and link that back to payments, and then you've got something there too.
You mentioned something very interesting in the early, midway through the conversation, something about there is change that you're looking to bring, and change often, of course, is difficult. Naturally, you have to fight through it. Sometimes most of the times, results are not going to go your way. So it's kind of like a Don Quixote figure, so to speak, the aspect of it that you have to go in and play. So, as a person who is not alien to resistance, I guess my question is, you've coached a lot of frontline teams, sat in board strategy C-suite strategy sessions. Where does the real resistance to change actually live inside of a company?
Yeah, that's a really big question. From my experience, I can tell you that it actually generally isn't on the front line. So when you're working when you get to the point of actually rolling out the transformation or the change, as long as your frontline teams really understand what it is you're trying to do and why you're trying to do it, and you're really clear around demonstrating how you're going to make their lives better and easier and their jobs better and easier as a result of that change, you're pushing against an open door, and generally they're the best ones. They are your number one change agents. To answer your question directly, I think the biggest challenge typically in my experience, has been within the boardroom, because it's designed to drive, tension between competing priorities. And sometimes,
Sure.
you have to work your hardest, and rightly so, you have to work your hardest to convince a director of a specific function that might necessarily carry a bit of the early work. You have to work really hard to convince them of the benefits off the back of it. But furthermore, you've got to do that in the context of a stack of other priorities and strategic initiatives that are being brought to that same board table, possibly even that meeting, that this one is more important than this one.
Sure.
So, you've got the challenge of competing priorities, and you've also got, to a degree, a lot of change inertia, because there's constantly conversations about different change initiatives, etc. And you can get a few eye rolls or whatever, because you've got to guard against apathy in that scenario, in that setting. And if you can't get it through that first setting and scenario, then it doesn't make it any further. So that is typically some of the hardest play. That's probably the hardest place to drive the change. And from that moment, though, you start to drive your unstoppable momentum, and then you just capitalize on it at that point. So you've got to work your hardest there, I would say.
I'll ask you something interesting, which is, we as a species love appreciation. That's just naturally, it's kind of like an indicator signal, so to speak, that tells us that, hey, we're going in the right direction. Literally from early on, all the way down to, hey, you've done a good job. You feel yeah, I've done something good. I'm going in the right direction. Upon doing research, Zintrix won Startup of the Year at the RTIH Innovation Awards. I'm curious, as somebody leading the charge, what does an award like that actually do for an early stage company? Is it a signal like you would perceive it so, or do you think it's just a noise masking signal?
Yeah, for us, that was number one. I have to say that was a totally organic award. So you get a lot, you see a lot of awards, particularly I think in the fintech space, and where you're seeing people sponsoring events or whatever, and then winning awards, and read into that what you will. But this was, we were a really, really young startup at this point, and we won this organically, and we won it, I think, from memory, because of the concept and what we were trying to solve, the problem we were trying to solve in terms of the value of solving it, the way we were structured, the way we were set up, and some of the experience of the team and our ability to answer the challenge was effectively some of the I think quotes from the event and the awards. For us, it was really important actually, because it was a real validation that we were attacking something that headache that needed to be solved. And secondly, in that room at that event, we had the likes of Tesco, we had banks in there, we had Curry, Levi, like huge, massive brands, Co-op. So for us to be on the stage receiving an award with that sort of company was genuinely really quite a break moment for us. And there's lots of startups around, but for us to be able to use that logo and the brand and talk about that award and have a reason to talk about it, it gave us instant credibility at a really early stage, which helped to sign our first clients, if I'm honest. So no, it was a really important moment actually. We were really proud.
Absolutely. That's amazing. You have every right to be. That's perfect. I want to ask you one last question before we head into our rapid fire round. Is there a trend in retail or fintech, up to you, do you think is massively overhyped right now?
I think I would say AI, broad brush. So people will just say AI. But like clearly AI is amazing and used and deployed to again solve real problems or to improve the efficiency of specific things. It's critical, and it's obviously highly transformational. But I just think again, it's a symptom and potentially a risk. Businesses going, look at this amazing AI tech I've got over here, and then try and find the solution or the problem that it's solving. It's that something can be the wrong way round. So that's what I mean about AI being potentially overhyped, because someone will just say that and like they'll expect the valuation of their business to go through the roof because they're talking about or referencing AI. But a lot of the time, it's not actually an applicable solution to a real genuine problem that needs to be solved right now. So I think people and businesses have to be careful about that term and potentially overhyping it in areas where it's not potentially as effective as it could or should.
Absolutely. This is fantastic stuff, Tom. So rapid fire round, very quick questions, very quick answers. Best advice you've ever received, business or personal?
Get stuck in. Just get stuck in. Understand your business. Understand like the real basic operating procedures. Be a real scholar of your business, so to speak, all framed within the same thing.
Fantastic. And on the flip side, advice you ignored or wish you had listened to?
Oh gosh. Advice I'd have ignored that I wish I'd listened to. Goodness me. I think don't take things too personally. When you like, you would always you get that advice a lot, but when you care a lot, it's really hard not to do that. I wish I could do a better job of that.
I think this one goes for us all. What would you tell your younger self, say 7 to 10 years ago?
Don't sweat the small stuff. There will be, you'll overthink probably most things. And crucify yourself for things that you might think are massive at the time, but when you helicopter up, actually, they're not that big. So stop wasting energy crucifying yourself and sweating over the really small things in the bigger picture.
I think it's like you just don't be crappy to yourself. There's plenty of people out there that will do that for you.
Yeah, no, definitely. I think that's again a bit of a trait that a lot of people have, but it's something I've definitely
Unfortunately
battled with
percent
continuously.
Yeah. an ongoing challenge in your current work that keeps you up at night?
I think one of the biggest learnings for me stepping into the CEO role has been the fact that it's your head and your brain is constantly firing, and it's constantly thinking about all sorts of different things. So the thing that I am really learning to grapple with at the moment is being at peace with the fact that my mind is always going to be firing. I don't think I can stop that now, but trying to find and build ways so I can do that in a healthy way. That is, to an extent, that is one of the things that keep me up at night, trying to find ways to keep that in check. And then equally, just thinking about everything all the time in itself is something that is keeps me up all night as well. But I do think if I don't find the right checks and balances around that, that will be something that is unsustainable. So I work really hard at trying to find a really good integrated world where I'm going for a run or a bike ride or whatever it might be at the same time as doing my day job, and being at peace with the fact that might still be working after I've put the kids to bed at 8 o'clock. I'll do some work then, but I might have gone for a run at 10:30 in the morning, and that's one of my coping mechanisms with that specific challenge I'm dealing with.
That's awesome. On the light side, your favorite restaurant, meal, or spot in London?
Good question. There's a restaurant in Marylebone called Lura, Lurra, and it's like a sort of Basque restaurant. And it's just awesome. We go there after some board meetings, and we just have like the most incredible sort of steaks or like veg, and the food quality is just insane. It's not pretentious. It's just really great, authentic food done well in a great environment, and love it. It's brilliant.
So I'll put you down as a yes for Nando's.
Yeah, 100%. Extra hot sauce, please.
That's excellent. And one last question: one tool that you cannot live without.
Oh, one tool, Notion.
Oh, Notion is
Notion.
good. Notion.
I like swear by it. I use it and we use it for all of our technical delivery programs. I use it for my notes for meetings. I use it for my my sort of ideations. I use it everywhere. Follow up. I used it to build my wife a surprise 40th birthday recently, and yeah,
that's awesome.
I'd be lost without that.
Yeah, Notion is great. It's yeah, I love Notion too. This is fantastic. I really appreciate it. Where can listeners find you?
You can find me on LinkedIn. Just Tom Hill on Zintrix. You can obviously just type in Zintrix Limited, and you'll find us there too. Or our website is just zintrix.io, and you can find me there as well.
There you go. This is perfect. Any upcoming project, launch, talk, or event that you're excited about?
Yeah. We just found out yesterday, actually, that we have been made a finalist at the UK Finance and Bank of England Ideathon, which I think is in basically 2 weeks. I think NatWest won it last year for a product and a concept that they had. And there's 5 finalists this year. I think it's 5. We are one of them. So I'm a little bit overwhelmed, but I've got to stand on stage in front of about 500 execs across the banking world, payment space, Bank of England, UK Finance, and the press, and we'll talk about what we're doing. And I'm actually going to talk a lot about our payments with purpose piece, specifically, and what we're doing in that space. Yeah, that's cool. And apparently there's a live vote as to which is the best idea, and the winner is announced there and then. So no pressure.
No pressure.
Yeah, that's quite interesting.
I think you're going to do great. And like I said, from the sidelines, keeping my fingers crossed. Hopefully this goes well for you and you win the award. But this is great news. This is excellent. Looking forward to seeing the results. Tom,
yeah, cool.
Fascinating conversation. I know that these topics can all they might not be very exciting for most people, but these are the ones that make a massive change for a lot of people in people's lives. For coming in here, having a chat with me about it, it's fantastic. I definitely learn a lot. I mean, make a ton of notes, so that is always a good litmus test of things. I really appreciate you. Thank you so much.
No, thank you. I appreciate the time as well. It's been really good. Really enjoyed it.
Absolutely. Folks, if you got value out of this, share it with someone who needs to hear it. I'll see you next week. Thank you. Bye.
Cheers.